What's up, everybody? Welcome back to Earn It, Save It, Invest It. This is week 22 of my $100,000 challenge. I'm going to go over what I've done, how my portfolio is doing, as well as what I think is going to happen in the market. So go ahead and please give a like and subscribe if you do like this stuff. And let's get down to it really quickly. I don't want to take too much time. As you can see right now, my $100,000 challenge is at $9,445.51. That's down a little bit from last week. As you can see, and let's go to this. You can see HIMS still is the leading weight, right? It went up, and this is just Friday. And so, it's gone down in the whole week, -6, and then TQQQ has gone up 5%. So, HIMS they're both meeting, kind of now starting to meet in the middle. Then I have all the rest of them: Celsius, Nike, Fubo, Meta, Amazon, Hesai, and Adobe. I added a little bit in Meta. I'm going to go over that later on. But over the week, I've had some decent performers and some bad performers, right? It's been like a really mixed bag. You can see almost -7 for my top holding for HIMS, and then almost, it's 5.5% for my second best. -5, and then -6.5 for 3 and 4, 4 for Fubo, 5, and then -12 for Meta. It went down 12% for the week. It had a drop of about 11% just in that one day. Then I'm up 9 and 4% on those for the week, and then down -3, almost 4%. So it was a mixed bag. It was what it was. I can't complain too much. The market did have a kind of crazy week, and then I did say that HIMS was going to have a bad week or a bad month, bad October. I should have sold maybe a little bit more, but I didn't. So we're going to see what November does, and I think actually November could be a really good month for HIMS. But we'll see. I did call that it was going to have around 20% drop. So where I'm at right now, where I stand on my challenge, right here, right? This is week 22. So I'm starting to get closer and closer now to the goal, right? Which is still not bad if I'm close to the goal, but it's been nice being far above it, right? When I hit 9,600 and the goal was 8,600, now that's a good amount. I'm $1,000 above the goal. But as HIMS continued to drop, as my other stocks had some issues, right? It was, I had a few bad weeks, and then it went up a little bit, and then it's gone down about 1.5%. Charles Schwab is having some technical difficulties, so I'm unable to go through the charts. And because usually I'll show you, like the 1%, 2%, like how much I've gone up, since I started the challenge and over the last week. So I can't go over that right now, but I'm just going over this really quick. So I was down about 1.5%. And so again, I'm getting closer to this. Now I'm only, 360 away instead of being 1,000. I was 1,000 above my goal, and I'm feeling good. And this is just what happens in the stock market. Now, granted, I haven't even gone through a crash yet with this, so it's going to be very interesting. But I feel like I've kind of gone through some mini crashes, right? This was a mini crash for me because HIMS is my big holdings, and it went from 58 to 43, 45. So had a decent amount going down. Like I said, I did buy Meta. I bought $50 worth of Meta, and it was only $0.07 worth, but I figured, hey, it's not going to be down for that long. This is a good time to buy. I do believe in the company. I do believe in the business. Let me put $50 in when it goes down. Like I said, I'm going to be buying stocks that are high quality businesses and stuff like that. And if I see a company go through a big drop, that's when I want to buy. It doesn't mean that I'm going to start throwing in a bunch of money right now, but it went down 10% plus. I'm going to throw $50 in, right? I threw $50 into it. Okay, if it continues to go down a little bit, maybe I'll put in a little bit more, but maybe it doesn't continue to go down and it continues to go up from here, right? So I'm hoping that $50 is going to compound even better than the typical shareholder right now that's going to be starting to buy maybe over the next months or whatever. So so yeah, that's my goal, is to buy good, high quality companies that aren't necessarily doing well in the stock price, but their business is great. And so it's going to go up. And that's also why I did buy Adobe. Hesai was it's a Chinese LiDAR company. It's more about future potential and stuff like that. But Adobe's like that too. It's gone down significantly over the last 2 years. And so I believe in the company. I use the business, their products a lot, right? So I do believe in it, and they produce good numbers. And so I did buy into that as well. And so I'm just going to be doing that when companies are going through a hard time in the stock. Nike's going through a hard time in the stock. Eventually, this is all going to pay out dividends later, and they actually do pay out dividends, right? Nike, Meta. So that's just my 2 cents really quick. The AAII investor sentiment. I went over this in my last video. As you can see, we've now almost reached that big bullish point, and then we dropped big when we had that big little scare, right? I call it big because it was a big crash for a day, but it was a day. It was very quickly, and then it was like, oh wait, what? Nothing's happened. And then we continue to go up, even though some stocks have gone down significantly, like Meta, a few others have gone down. But it's earnings season, so that's going to happen. You're going to have more volatility when earnings season is coming. I'm just getting off my sickness. Sorry for all the congestion, but yeah, you're going to have more volatility when earnings season is here. So, that's just what it is. This week's special kid, what would you be giving other kids? I do not have kids, so a lot of these people don't even have kids, and then mix of chocolate, other candy chocolate, something else. There should be scare. I'm going to give them a scare. Right? What about the people that are going to give them a scare? Fear. We're in the fear and greed index. We're stuck in the fear. And I said this. I literally said we're going to go from greed into the neutral and fear and kind of be stuck around that top end of fear and neutral. We're going to be stuck right there until something really happens. And it kind of feels like that's exactly what's happening right now. I don't know what it is. There has to be a catalyst to send the market down, right? The market's typically not just going to go down unless the economy and there's things to happen. But again, there has to be a catalyst, right? Is there going to be unemployment? Is there going to be housing? What is it that makes it go down? And so far, we don't really have too much, right? Earnings have been good. Guidance has been good. So it's not like there's anything bad, but we are still stuck in this little fear zone, and I think something has to happen. Something has to happen. And the reason why I say that is because when you look at the stock chart, let me show you. This is QQQ. And I said I expected the market to crash maybe around like where Powell, this is where Powell was making his announcement about the rates going down. And we all knew it was going to happen, so I thought maybe, okay, that's when it would go down. Again, this is why you don't time the market at all. And then here, I was like, okay, well, we just pushed up pretty heavily. If this is at all a sign for us going down, this could be it. And maybe we push down here for the next month of October, right? Because I felt like October would be a rough month. Nope. Now we're going into November. What's going to happen? Now, I went back all the way to basically 2018, all the way back here. 2017, 2018, right? This one was 444 days between us having a top, dropping about 10% or more, and then meeting up with that top again, and then kind of never looking back, right? This one lasted 444 days, this like kind of bull market, bull time before we dropped 10%. After that, every time before a correction, or all the little bull markets in between our corrections, right? Or even if it was this, right? Even our big crash. This one was 167 days, and this one was 175 days. But typically, the average between 2018 all the way till this last one, 2025, All of these little bull runs, on average, lasted 112 days. So that's not that much. And right now we are looking at a total of 129. Now we saw 175 and we saw 167. Right? So how far do we go? You know, could we last another month or two? If we go into January, that'd be another 60 days. That'd put us, you know, at 190. That would surpass everything all the way back to 2017. 190, 132, 79, 60, 167, 175, 83, 129. So look, 175 I think is a big one, right? 175, we came out of this, and this was, you have to understand, this 175 days of us coming out of this top, that's after 378 days of almost just purely going up, right? We did have a 100-day period where we went down, but really, so that's 278 days of just going up, essentially, right? We went up, 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 up. We had a 3-month period where it didn't go so well, and then we just continued to go up. And that was the summertime, right? June, July, August, and into September, all those bad months that are typical. So we continue to climb, and it's 175 days. So from there, that's what, 45 days from now? So that's in the middle of December, right? Middle of December, and then we're reaching this. So it's going to be interesting to see how far we get. You know, are we going to just keep climbing before we have this correction? I think we have to have a 10% correction at some point. And what you have to understand is usually whatever the indexes do, individual stocks do more, right? Not everyone, but if you have like an Amazon, a Netflix, a Meta, a Google, any of these, a Tesla, if the indexes go down 10%, these stocks typically will go down 15, 20, 25%, maybe even 30%. You know, you can look at it as about 1.5 to 2.5 times the index because they just are a little bit more volatile. And the indexes, they have other stocks that are not going down as much. They have stocks that are still going up, even though the market, a bunch of individual stocks are going down. So I'm very interested to see how far we can go with all this. I got something in my eye. But yeah, you know, we're at 130 days. So if we go through this holiday season, if we go through November and December and we're good, I'm a little scared about January 2026, to be honest with you. I will be scared because then it would be seeming like, okay, how far can we stretch this market? Or maybe or maybe we don't go anywhere. Maybe we just kind of bounce up and down, and then we kind of stay where we are right now. So we don't really, you know, maybe we go down 5%, up, 7%, down 2%. We kind of like swing that way. That would also make sense, but again, typically it doesn't happen. We usually have a 10% or more drop on average 112 days over the last, what is it now, almost 9 years? It's been almost 9 years. It's I guess 7 years, but we're reaching 8 years. So yeah, that's my 2 cents. Go ahead and please give a like and subscribe if you like my stuff. A little exhausted, a little tired, and now I'm getting things in my eye, but I have to charge my computer too. So yeah, anyway, hope you guys like this. My portfolio is going up, but it's not going up as much as I'd like it to, and it went down this last week. So I'm going to do what I can, and yeah, never forget to earn it.